and we give to a person who is an expertise in event manager. What he used to do, he used to buy the Ganesh idols, the decorations. So basically what institutional investors, there are larger organizations. They pull together the funds, okay, on behalf of us and invest in financial instruments. It can be mutual funds. It can be equity traded funds. Equity traded funds. If you remember, we discussed in the previous session. Okay. Equity traded funds. It can be index funds. It can be gold ETFs. Okay. Pension funds of government. You have seen many pensions fund that has been raised. Okay. May it be Pradhan Mantri's that PM's pension fund, that is one currently. Again, Rajiv Gandhi pension fund is one that is currently being there. It's been long. So they invest into, talk about mutual funds, they invest into share, debt market, bond market. Talk about insurance funds. Insurance fund basically invest into unit linked insurance policies, some related to debt and equity market, some related to protection. Pension fund basically invest in government bonds. Okay, giving in a fixed rate of return where you can lock in this percentage of return. Because currently, if you see, the banks are again having some 5.95. That's the highest for the senior citizens. So here you can lock in for a longer period of time. Okay. And these are the institutional investors. What are we when we buy? We are a retail investor. Similarly, if you talk about into any like manufacturing industry, that hierarchy goes like that way. A manufacturer produces a product that goes to the distributor. The distributor sells, gives it to the wholesale market. Then it goes to the retail market where we buy. Similarly, the hierarchy goes. Okay. So there are institutional investors and retail investors in case of financial instruments. And again, they have this expertise in matter. Okay. So if you talk about you want to save, why do you go to a savings bank account to save? Why don't you keep it with your in your safe, in your locker, in your Godrej locker you have? The now digital ones is gone. Why don't you keep it there? Why do you go to banks? So they are the expertise in savings. Coming to mutual funds, they are the expertise in the wealth management part. Pension fund, they have this planning of giving us a pension when you are retired. And insurance companies, they definitely gives a protection solution. If we are not there, who will take care of the financial needs of our family with a wealth creation part, right? And in contrast to the individual and retail investors, institutional investors have a greater influence. See, if I personally will ask you, you save the money with me, will you? But if the SBI bank is saying, okay, you give it in our savings bank account, we will giving you a fixed rate of return. So you will be definitely influenced on that part. Okay. Why it is? Definitely they have professional researchers. They have the expertise in matter. They have their portfolio manager, risk takers, risk management beings, like team to take care of your entire monetary movement to keep it safe. So this is basically on the institutional investor, how they work. The institutional investors can be banks, can be mutual funds, funds investing in particular like equity funds, may it be debt funds. Okay, and insurance company. Insurance company basically talk about unit linked like insurance policies, may it be a pension plan in insurance. Okay, so these are certain institutional investors. Our topic for the day will be focusing on mutual funds. Again, you have heard this particular line since childhood, the advertisement is on. Mutual funds are subjected to market risk. Please read the offer document carefully before investing. Okay, so we'll learn about mutual funds, how this particularly works. What are the classifications if we classify on our risk appetite? Okay, if we classify on that, we'll be learning on, and how to invest and what are the risk factors involved. Okay, so moving ahead, coming to mutual funds. What is a mutual fund? So basically, again, it is a pool of investors' money. Okay, we pool it money invested on a certain objective. Objective is to get high return. That is managed by a fund manager who is the subject matter expertise. Okay, he invests in that to give ample of returns, the desired returns to everyone. Giving again re-example, coming up is a Ganesh Chaturthi, right? I am sure not one single student will afford the entire budget of Ganesh Chaturthi. एक कोई ऐसा बंदा नहीं होगा बोलेगा मैं गणेश मूर्ति देगा, मैं प्रसाद का स्पॉन्सर करेगा, डेकोरेशन भी मेरा, एंटरटेनमेंट भी मेरा. Huge money will be get chucked. What we used to do? अगर मैं बोलूं मेरे पास 1 लाख रुपए है, मेरे को रिलायंस का शेयर खरीदना है, मेरे को एचआर मोटर्स का शेयर खरीदना है, मेरे को एमआरएफ का शेयर खरीदना है. It cannot be because MRF share is some 60,000. Reliance into this. If I want to 10 buy, what I will do? I will try to pull the money. Talking about that example of Ganesh Chaturthi, कोई अकेला बंदा टोटल स्पॉन्सर नहीं करता. हम लोग चंदा कलेक्ट करते हैं, राइट? चंदा कलेक्ट करते हैं, एक जगह पे डालते हैं. दैट इज योर पूल ऑफ मनी. आप लोग किसको देते हो? एक बंदा जो ऑलरेडी बहुत सारा गणेश पूजा इवेंट्स उसके घर पे या उसके कॉलोनी पे कर चुका है. ही इज द सब्जेक्ट मैटर एक्सपर्ट. So for mutual fund, it is a fund manager. And fund manager tell you they are the highest paid. Giving an example, आपको एक fund का नाम दूंगा, that is a equity fund. Okay, अगर मैं Nippon India top 200 fund का, it's again one of the funds that I have invested long back, giving ample of return. उनका fund manager का नाम है शैलेश राजभान. He is the fund manager of Reliance Nippon. It's not currently Nippon top 200 fund. Okay, that is managed by the fund manager Shailesh Rajbhan. Similarly, the Ganesh Chaturthi example, you guys will be giving to a subject matter expert who has already done these events of Ganesh Chaturthi in the colony or in the family. Okay, what he will do, the fund manager or the chanda collection part, he will invest. For the fund manager, he invests in stocks and securities with his expert knowledge. If we are investing in an equity fund, it will be much more into shares. The example I gave of Shailesh Rajbhan, okay, he's a fund manager of equity fund. That's Nippon top 200 fund. His work is to, expertise is to invest the pool of money into top 200 companies, depending on what are profitable ratio. Okay. He will choose the stocks from Sensex or Nifty 50, the top companies, okay, trading in our indices. For what? To give the returns. This pool of funds will generate returns, which will be enjoyed by the investor. Similarly, talking about a Ganesh Chaturthi part, if you are giving it to one person, the leader you have chosen, okay, he will be investing in the Ganesh Murti idol, the prasads, the decoration, and little entertainment in the music part. Who all will enjoy the prasad and entertainment? That will directly come to the investors, right? So basically that is how a mutual fund works. Okay, we pull together the money. Asset management company is one. Okay, that again has the funds what you will be investing in. So talking about Ganesh Chaturthi supposedly it is a asset management company. Sorry, it is a fund managed by a fund manager. Asset management company has different funds under them. Mutual funds are basically funds managed by fund manager, but that is again with ownership of a asset management company. Asset management companies can be Nippon India is one. Okay, Mirei Assets is one. Motilal Oswal is one. Axis Mutual Funds is one. Kotak Mutual Funds is one. They are asset management companies. Coming to next, the mutual funds. What are the funds? For Kotak, Kotak's top fund is one, Kotak top 25. Equity fund, focused top 25 fund. Mirei Assets has also a balanced fund that's also a top 200 funds. Okay, post asset management company will choose a fund. Then we will see who's the subject matter expert, the fund managers. That is again hired by the asset management company who takes care of the entire pool, invests in desired stocks or securities, and with his expertise knowledge, we get some returns. So moving ahead, okay, let us see how can we classify. If we are classifying, okay, on based of investment objective, okay, depend. That is again, investment objective has the risk appetite of ours that getting into calculation. We can categorize into three segments. Okay, it can be a debt fund, it can be a equity fund, or a hybrid fund. Talking about debt fund, okay, for the person who has a less risk appetite, a lesser risk appetite, they can go for a debt fund. In debt mutual funds, okay, mostly, okay, 90% of your the pool money is invested in government bonds. Government bonds giving a fixed return. Okay, may it be current market states, they're giving us a 9%. Okay, actually the debt funds are giving us a 7% because that's a 90% exposure, and 10% into equity. People with lesser like risk appetite, they invest in debt funds. Okay, giving a stable regular income throughout. And talking about the percentage of return you will be getting in a debt fund, currently if you go on to any asset management company's debt fund, so 9.5 is the maximum return that you will be getting on a regular term. But again, if you compare it with the savings bank, the FDs, okay, that is giving us a higher return. Now coming to equity funds, where I invest much amount of my salary, income, whatever I do. Equity funds are basically into wealth creation. You want your money to grow. Where will you put at a lesser risk? If I put into one stock, okay, there is a saying, never put all your eggs into one basket. There is a risk. So that's where mutual fund and equity funds helps us. Lesser risk, but your investments will grow. In equity funds, the pool of money is invested majorly, 95% will be invested in equity markets. It can be small caps, mid caps, okay, top 200 companies, okay, top 100 companies, focus 25 companies, depending on again sectors of market capitalization companies, we are investing in equity funds. And hybrid funds. These are basically a mix of debt and equity, wherein, okay, your wealth is growing, also you are booking a safer side. 11 to 12% return you can expect in these kinds of fund. Okay, talking about the recently launched fund is one. SBI's asset management company, SBI Mutual Fund, has recently launched. When again, another thing I want to add on, when a mutual fund is launched, okay, first when it enters the market, it is called an NFO. Okay, it's called an NFO. So hybrid fund recently launched by SBI Mutual Fund is a SBI's BAF, Balanced Advantage Fund, wherein the equity and debt exposures, okay, goes by 50%, 50% both. Wherein your money is growing, also 50% of money is secure in debt funds, giving you a regular income. So that's on classification of investment objective. Coming henceforth, classification of investment styles. How we used to invest, how the investors style is, we can categorize it to two major funds. That is a passive fund and there are active funds. Okay, passive fund basically, okay, in passive fund, it's a type of fund, okay, that religiously tracks the market index. If you remember my last session, we were talking about market indices. So two major indices that we study is Sensex and Nifty 50. But again, under it, there is Nifty Bank. Okay, we have Nifty Pharma. Okay, there are many indices. So what are passive funds? Basically, they are majorly into market indices. Here, the fund like manager doesn't actively choose fund. यहाँ पे fund manager का stock share करना मतलब stock choose करने का काम ही नहीं. They will just track on the how it grows. So now I will break it. Can anybody say what Sensex closed yesterday? Can anybody say? At what point Sensex closed yesterday?
54, sir, 54,300. That is the day
Uh,
before yesterday.
okay, day before yesterday was. It closed in 55,400. So
Wow.
again, talking about Sensex, it reached the highest part. When I was like into markets, I entered post my job 2014. Okay, the Sensex was in 23,000. People who have invested in indices fund, the Sensex funds, definitely their money has grown to more than triple. Similarly with Nifty funds, if you talk about Nifty, Nifty has breached 16,000 mark. 2014 it was down by 11,000 points. Okay, and index funds are good way of investing when you know nothing, because here investors doesn't have to do a research. Okay, you see how what is the points Nifty and how it is growing, you simply invest. Best buy for the investors. Coming to active funds, okay, so the primary job of an active fund manager, you talk about the example I gave of Nippon India's fund manager, okay, Sailesh Rajbhan. His major work is to brainstorm and see and choose stock which are profitable in the top 200 segment. Okay, so active funds are basically okay into change of stocks. If I talk about small cap stock of Nippon, okay, the fund manager, what is his duty? Track the market in small cap and change the stocks that are into invested. And if you all want to know what are the stocks getting invested, it is very transparent. You can get it through a fund fact sheet. If you talk about a fund fact sheet, every asset management company has a fund fact sheet. So they have these equity funds, may it be passive funds, may it be active funds, they have categorized into that. And where it is getting invested. You talk about top 200 fund of Nippon, you can see what will be the shares that got getting invested. Okay. And talking about expensive, higher expenses is there in passive funds. Passive funds, okay, they are the highest paid. They earn in more than crores. Okay, with their basic salaries, because they take care of the entire like AUM asset managed under them. Talk about the example I gave of Nippon India top 200 fund. The AUM stands at more than 13,000 crores. So managing 13,000 crores of Indian money is something very big, and expertise in the matter that only can do it. So we will move ahead. Till now everybody is with me. Can anybody confirm everybody is with me? Any clarifications needed till now? Yeah, we'll break
Yes,
for a
yes.
minute.
Yes,
Okay,
sir. Yes,
okay,
sir.
thank you. So we
Sir,
will
why
move
Sensex, if I
ahead.
can ask, why Sensex is rising so rapidly?
So now if you see why Sensex is rising, that is not again related to mutual fund, but definitely I will reply this. You have seen there are many IPOs that have come in. Till now 2021 has seen, okay, this year 21 IPOs, new stocks entered into market. When the new stocks are entering into market, people invest much more, and our market is going bullish. It's in a very bull track. It's going high. People are putting more money into equities. So if you talk
So
about
liquidity is
last five,
the main reason. Liquidity and optimism.
yeah, people are optimistic, and talk about there are, if you compare the age group, okay, this is lesser age 40 and less, they are putting their money, okay, very optimistic way. So huge money inflow in our Indian capital market. Again, thanks to our PM, definitely I will give a applaud for our Prime Minister Narendra Modi ji here, because he has allowed in this pandemic scenario how our economy will grow by giving a chance to the newcomers, the new companies. Okay, so many of the IPOs there are making our market boom in with more funds. So that's one part,
Okay.
our Sensex is growing. Again, to a risk part. Okay, if you observe, 2015 we saw some 16 IPOs came up, but market is a place that takes frequent corrections. Post this, we are at all high. People will book their profit. When people will book their profit and take out the money, market will definitely take a point correction. But we can never assume when and what time it will come. Okay, that is again the subject matter expert that will take care of it.
Thank you, sir.
So moving ahead, we will take some examples of passive fund. So passive funds, again, Nippon India Sensex fund is one. So everybody, you might this Nippon name will be very new to you all. Okay, it was previously Reliance Nippon Asset Management Company. Okay, but Reliance Capital, okay, demerged it. It was a company owned by Anil Ambani. It went into losses. Nippon is a Japanese company tie-up. Nippon took it over. So it's now Nippon India, the company is called. Passive funds is basically what I told. They invest in the indices. Nothing more they take care of. So Nippon India Sensex fund is one hell of a fund that has given us a 53% return with my last 3 years investment part. HDFC Index Fund Nifty 50 is one. Talk about active funds, there are many. These are two examples. Kotak Small Cap Fund. It's a equity fund invested in the small capitalized company. We also have Kotak's Focus 25 Fund. Okay, you talk about SBI's Blue Chip Fund. Motilal also a long-term equity fund. Okay, Reliance Nippon Top 200 funds. Mirei Asset Focus 25. These are active funds. The work of the fund manager there is to track down on the stocks that are giving returns in that particular segment, and very often they change it to give the investors the desired returns. And talk about my investment in SIDs. Okay, so last 3 years, on an average, 33% of return I have got with my investment in mutual funds. That's one hell of 33%. No financial instrument can give you that, apart from directly investing into stocks. That is again quite riskier. So now coming to the risk part, how can you see the risk? How can you take a note of the risk that is involved? So again, talk about the three categories we deal in. Equity funds, definitely they are quite riskier because it directly related to market. If there is a sudden surge, the market falls back. Okay, equity funds are volatile in nature, quite high risk. But here the fund manager is taking care of. He will definitely diversify the stocks, okay, diversify into different sectors. You talked about one fund, again talking about Reliance Top 200, Nippon India Top 200 fund. It had major exposure in automobile, some 13% weightage in automobile. It was prior to Q1 of the starting. But again, when the automobile sector went down, Mr. Sailesh Rajban, who's the fund manager, diversified into top pharma stocks because the pharma sector was that time growing. Okay, it's again, yeah, but talk about equity funds, they are quite volatile. Talk about debt funds. In debt funds, your entire investments majorly are put into government bonds, fixed government bonds with talk about 6% return for 10 years that is be fixed. That's what it is getting invested in. Hybrid funds are moderate. You can take a risk. These are balanced advantage funds mainly, wherein 50% will be allocated in equities and 50% of your investments are allocated in debt. And another part, the risk meter, if you see, every fund, okay, has a ratings, and the ratings is given by, for mutual fund, basically we follow the entire India even follows the ratings of CRISIL, CRISIL. You might have heard CRISIL. Okay, it is again one of the recruiters in ASBM. It was prior to in our time. CRISIL is credit rating. Okay, definition Securities of India. CRISIL monitors the fund managed by the fund manager, where it is getting invested. On that CRISIL, with the last performances, rates the fund. Apart from these three categories, CRISIL has the authority to rate the fund, and CRISIL's ratings matter a lot when we invest. See, if you that's on the rating part. If there is a arranged marriage scenario talk about, okay, definitely on the part of the lady's family, the girl's family or the boy's family, you take a note from made the friend circle, made the year circle, why to? You take care of basically we want to collect information. Will that be good? Will he or she be a good groom or the bride? Will she or he can be a good family member? We take notes of this. Similarly, when we invest, what we take care of? Are my returns safe? What are the chances of the my principal amount getting chucked in? What are the chances of my desired return will be lower? So we depend quietly on CRISIL for that. Okay. So that's on the risk profile meter, how you judge risk. CRISIL is one entire of our country follows in terms of funds. Now the major part, how to invest and what are the investment modes. See, mutual funds, basically there are two types. One, you put lump sum. Suppose you have a 10,000, you choose a fund, you choose maybe a equity or a debt or a hybrid fund. Okay, apart from these categories, you choose particular asset management company, then particular fund. Okay, you put it there. You had 10,000, you chose Kotak Asset Management Company. Then on Kotak Asset Management Company, you chose a equity fund, that's Kotak Focused Equity. You have put your 10,000, right? And you wait it till your objective, like your like savings objective term is prepared. Yes, it is quite volatile because now if you see the markets are high. Okay, if the market takes a correction here by some 5,000 points, you may see, okay, post some year, it may be in negative. Second is SIPs. This is again one word that is quite known by the entire audience, I feel, are SIPs, systematic investment plan. How this works? Basically, you choose the fund, but you don't allocate your entire money at one go. You do it in a systematic way. Every month you choose a date, okay, supposedly second, because your salary or your pocket money flows in there. Your father transfer your money. If you want to save, you go on a systematic way. Every month, 2,000 rupees. It can be on a monthly manner. It can be on a like quarterly manner or a half yearly manner. You can choose for quite a systematic way. Okay, you have the options of dates. Okay, again, it will be there depending 1st, 5th, 10th, depends on fund managing company and yours interval. Why it is safe? Okay, supposedly you want to start petrol prices. Okay, talk about petrol prices. It is at 104. Okay, but if you want to, if you have been investing in 1 liter of petrol since 3 years, every month 1 liter you buy. Okay, what are the prices? The averaging price will be there in total, right? So in SIPs, the averaging part takes the charge. Now the markets are high. The allocations will be less to you, the units allocations. Next month, the markets may be at a lower part. The allocations of units will be more to you. Okay, and in period of 10 years, okay, on market volatility, your entire units allocated will be on an averaging mode of the price. That's where it is safer. And trust me, the best part of savings, I will advise each and every one of you currently in this scenario, okay, in this place that we are discussing. It is one of the best way to save. We have heard about recurring deposit, RDs in banks. What are the percentage they are guaranteeing? Again, the rates of interest are falling in banking terms, right? But if you are investing via SIPs in mutual funds, it's one hell of a part where you can get wealthier. Trust me, my all the funds, I save some 7,000 per month in SIPs. Okay. So I started with 500 per month when I started my job. My salary was lower. I increased it different funds and diversified. But each and every fund has given me more than 40% returns. Never ever any business has given me in that part or any financial instruments. So that's one part I'll be advising each and every one of you. Kundi mein paisa mat dalo, SIP kar lo. Okay, so that's the two ways in investing. You directly can go on a lump sum part or a systematic investment plan. Okay, so move ahead. Coming to expense ratio, that is one part where the technical part comes in. Okay, expense ratio is basically the cost of managing a mutual fund, and it direct has the relation with the returns. The lower the expense ratio, it is considered definitely a good part. जैसे मैं 100 रुपए इन्वेस्ट किया, मेरा टैक्स में 30 रुपए कट के 70 रुपीज इन्वेस्ट हुआ. So similarly an example of expense ratio. Okay, and expense ratio आपको हर कंपनी का ET money, economic times money हो, money control हो, you can find it. Supposedly you are investing some 2000 per month in a particular fund. We have to see what is the expense ratio of that fund. What is your actual money that is getting invested? And again, the expense ratio of any fund goes to the fund managers, the asset management companies, for their subject knowledge expertise. Okay, we will go in detail how it is calculated, but the calculation part for us will not matter for now. What we should know is the lower the expense ratio, okay, the major units that will be allocated to us. Okay, so that's one part. You can see the expense ratio of any fund in economic times or money control or business standard apps. These are the three apps I should ask everybody must have on their smartphones rather than Instagram, Facebook or EA. Our part should be in learning and educating ourselves. Okay, so that's one part I will request. So that's the part. Expense ratio is taking an example of expense ratio of certain funds. So if I talk about Mirai Assets Emerging Blue Chip Fund, the expense ratio is 0.7. But if you talk about SBI's Life Fund, it is at 0.45. Okay, it is quite lesser than Mirai Asset. Mirai Asset, definitely the fund manager is a quite champ in sector. So that's why it is higher. And again, the returns have been higher. Kotak Blue Chip Fund 0.92 and Nippon India Sensex for 0.15. Why is Nippon India Sensex Fund expense ratio is less? Basically, an index fund. When I talked about index fund, okay, the role of fund manager is quite lower. Again, we are investing in the indices. May it be a Nifty 50, may it be a Sensex, may it be Nifty Pharma, may it be Nifty Bank. Okay, the fund manager doesn't have any active involvement in the change of stocks. Lesser paid fund managers basically investing into this. The expenses ratio falls down for that. Talk about equity funds. Equity funds, the role of fund managers are very high in completely tracking the markets, analyzing it. Okay, and then again, investing the ratios accordingly. So again, the cost of the fund manager, the asset managed company is quite higher. So for that, in equity fund, the expense ratio always stands at a higher part. Okay, so talk about this Kotak Blue Chip Fund, it's at 0.92. Any fund you want to invest, you can get the expense ratio in a money control made be on economic times. So this was majorly on how the mutual funds. Okay, we can go in depth definitely, but when we start something, when you build a house, start building a house, what we do? The fundamentals of the house should be strong, right? So this session is basically on the fundamentals, make it strong. Definitely there are major things, okay, because when you talk about markets, mutual funds, okay, there is very deep knowledge. The knowledge is very depth. We have to go step by step. So this is on the fundamentals of how mutual fund works, what are institutional investors, institutional organizations, how they invest. Okay. So I guess we can open up for a question answer round now. That is all from my side for the day. Let's open up for question answer round. We have more 10 minutes for a wonderful discussion on mutual funds. Any queries coming in, how you want to invest, has anyone invested till now or not? So we can open up for questions now.
Thank you, sir. Actually, my name is Tapadyut Naik. I have few questions, if you allow me.
Yes, definitely.
Actually, no. So, which one we should choose? Like, the indirect fund or direct fund?
So not on indirect or direct, that are passive and active. So this depends on your objective of saving. What is your objective of saving?
No, I was asking.
Sir, I guess there is some network disturbance. Your voice is stuck. But for everyone on the question sir asked is on what particular fund you should invest. That depends on my objective. If I want to buy a house, I am saving for it. Buying a house is a non-negotiable goal. My risk appetite will be lesser when I am investing in a house. That definitely you can go for a debt fund. But if my objective is to buy a luxury car at a shorter interval, I will be putting my money into equity funds. Definitely your objective depends on what fund we should invest in. And the diversification should be there.
So, in passive fund, the risk will be less compared to active funds, I believe.
See, passive fund, definitely we have no role in that. We are putting in Sensex, talk about passive fund deals in indices only. Okay, sir. So if we invest now, okay, I should be optimist how the markets will grow. Definitely talk about our Indian market, talk about Sensex. I am very optimistic it will go to 1 lakh. Because I have seen the growths in 2014. Quite less riskier. You put the money, but the time interval should be there. If we want to take out your money in 3 to 4 years, when we are expecting a correction in markets, and markets in every 4 to 5 years, it corrects by 1,000 points. Sensex reached 55,000. You have started investing now, lump sum. In emergency part, you want by like a year or two. That time when the market is correcting, your returns may be at lower phase. Two things, objectives and time period matters. But definitely it is lesser at risk in comparison with active funds. Again, active funds, if I talk about, if I'm talking about equity funds only, it is riskier. If I talk about debt funds, fixed, it is invested in government market, but the returns are some 11%. So there are many factors when we invest. One is our objective, our time period, okay, our liquidity part in emergency, if you want how much we can withdraw, and many of the keen investors see inflation into charge. If I invest 1 lakh, okay, now the price of 1 lakh is the petrol rates are high. So prior to 3-4 years, if I am having 1 lakh, I can buy many things. But if I'm planning at a debt fund, okay, debt fund which is giving me 11% of return, I should take inflation into account. So equity funds, again, depends on the risk appetite, the objective, the time period we are investing. So taking an example of mine, okay, I priorly said I invest 7,000 a month. But again, 7,000 is not one time. So I have 4 objectives. One is buying a new luxury car. I invest 2,000 in a equity fund. Okay. For my retirement planning, I am investing in a debt fund that is 2,000. Comes up to 4,000. Okay. Rest 3,000 is in a balanced fund. That's a hybrid fund I invest in. That is in systematic SIPs through I invest. So again, depends on objective of a and what is basically on objective and how the risk appetite should be related with that particular objective.
Okay, sir. Sir, actually, I invested in three different SIPs. One is Axis Mid Cap Growth Oriented Growth Fund. Then another is DSP BlackRock Tax Saver, and another is third one is the ICICI Prudential Balanced Growth. So should I continue or I change?
That's so great that I came to know. That one part is mid cap. Okay, that is again an equity fund you have invested particularly for your wealth management, wealth growing. Tax saver, you want to save your tax. That's one part we are investing in tax saver. But again, there is one good fund for tax saver, that is Aditya Birla's tax relief 95 is one good tax saver fund, and DSP is also one of the best selling tax saver funds currently. So your investments are in quite safe and it will grow, definitely give you a higher return. But talk about the mid cap, the equity exposure you had in mid cap, you never know it's in a particular sector that may fall. You can diversify into the top 200 companies rather. Because I have invested one part in a small cap. Now the small cap is giving me a negative returns. The small cap sector is downing. But talk about top 200 companies of India that are definitely in a growth part. India is growing, sir.
So that is in the large cap, you are saying?
That's in the large cap sector. So for wealth, the wealth creation, large cap sector should be quite preferable when your risk appetite is less. You talk about particular sectoral fund. If I am investing in mid cap or small cap for the last 2 years is going negative.
Because of boom, actually. When it's correction, then they will become positive.
Yeah, when it's a huge correction, the large caps are the only that will survive. Small caps and mid caps, they may die.
Very safe, yeah. Okay.
Yeah, sir.
Sir, what is the period should we look into? Like if it should be 5 year, 10 year, 20 year, we keep investing every month. Or we can exit, or we can add, or we can, change the edit the
again,
period.
depends on your objective. If I want to buy a luxury car, I have planned to buy it in a 5-year period. So till 5 years, I will never look into that fund, how it is growing. Post 5 years, I will see. But the longer period you wait, the better the returns are. Trust me, the longer period we invest in through SIPs, the better the returns are. Giving an example of a return part, I can show you live on a Google EA. But again, you trust. I hope you all believe me in this part. Relax Top 200 Fund. Okay, if you have invested at 2005, 1 lakh rupees. Currently, it stands at 1 crore 3,000, 30,000. 1 lakh invested in top 200 fund, 2005. Currently, it will be 1 crore 30 lakhs.
In 15 years,
market is booming.
More than 100 times.
India is growing, so is the Sensex, so is our money. But we are emotional by nature, we take out our money very soon. Giving an example of a stock, MRF, the stocks of MRF is at 60,000. Talk about 2001, 1,000 rupees it was. Your 1,000 now would have been grown to 60,000. So the longer you invest in market, the better returns definitely is there.
Now, suppose I start with 2 years period, then in future after 1 year I can extend it further. That SIP, or I need
definitely. In SIP there is no time period we have planned. We start a SIP with the objective, right? Objective of 2 years you sign the form of ECS, but it's not that it stops there. Your amount that will be giving through ECS, okay, auto debit functions, that will stop. But the invested money will grow on that particular fund. You can still add up with just another signature or a click, and now the apps are very strong. Talk about Opstock, Zerodha. With a click, you can again restart the SIPs.
Okay. So we can continue like.
So what about the quant fund, sir? Hello.
One time.
Hello?
So talk about one time and like part wherein SIPs, one time I see a little riskier. Okay, SIPs give us a averaging mode of buying things. So I'm buying a petrol at 104 to after a year it is 106. But after a year the government changes, it comes to again 60 rupees. It comes to again 50 rupees. Okay, your averaging mode, you will be having much more liters of petrol after 5 years. But now you are like subjecting in one lump sum part. It is riskier in the part how optimist you are for the market. If you want to take out our money at 3 years interval, okay, after 3 years, and might that time be a time when the market is correcting, your fund will be at risk. Not at risk, but the returns what you will be expecting will not be like satisfying you.
So,
but lump sum, when you are having, put it for a longer period of time. If you are putting it a longer period of time, definitely the returns are on.
Okay,
so I
thank
would
you,
like
sir. I
to.
have another participant actually
Sir, can
wanted
I?
to ask a question.
Yes,
Yeah,
yes, Nigar, you can one
yeah.
by one. Let's.
Yeah, so I was asking about this quant fund, sir. Like, what in this emerging scenario, how you see that down the line after 5 years, this quant fund will be like look around.
So for the markets, let me tell you one thing. I am very optimistic on the market. Okay, I'm a person who monitors the economic growth of our country, and I have seen how the Sensex has rose from 3,000 to 55,000. When I was in 2014, I was doubting. Okay, the market will take correction, but the entire trend of market is into correction. It will take correction when the investor takes out money. But definitely we are at a very rapid growing stage. I am very optimistic we are surpassing China's economy in next decade.
So I do agree with you, sir. But I was asking about the quant fund, sir, wherein like the manual intervention of the fund managers won't be there. It will be like system driven. So how you look around like after 5 to 10 years, how will be that quant fund working around? Because if we see that.
On that part, system driven, for me, if I talk about my personal advice, I depend on the fund manager expertise part. If I talk about the artificial intelligence, like bond parts, debt fund you are talking about, right?
Yeah, quant
Basically, you
funds.
are
Yeah,
talking about debt funds.
yeah.
Monitor the interest rate falling. 1990, what was the interest rate for banks, for bonds? More than 13% it was. Now it is on 5.95%. And that again will decrease. So the interest rates are gradually decreasing. If you invest in a bond fund, that is a very secured investment when you are putting your secured money. Definitely, I am not looking for that part because the interest rates will definitely fall.
Okay. Thank you, sir.
Yes, somebody else was asking something. We can open up still now.
Hello, any other questions? I hope, Vivek, there is no more question.
Still, I will wait because the audience is quite energized and want to know on their investment. And definitely, we all have one motive: how to
Okay,
make
no
our money
problem, no
grow.
problem.
So
No
I
problem.
can wait for a minute more to ask all the participants for any questions they are having.
So then mutual funds are replacing this bank deposits nowadays. Means as a
Nowadays, see, if I talk about the entire mass, what percentage? Suppose you have 1 lakh, I know what you will do. You will put just the amount of money you need day in and day out. You can put 10,000 in that. Rest you can put it in your mutual funds, might be stocks. You want your money to grow rather than in a stagnant part, right?
okay. Yes,
The
sir.
entire generation, in fact, follows the same.
Yes, sir. Right, sir.
We keep the amount of money in liquid asset, okay, in our ATMs where you can withdraw the day-to-day expenses. Rest our money should grow. And again, few of the allocations are into our safe side, like buying health insurance policies to take care of like any emergencies in health, or a term insurance plan we put in. But rest all money is put into where we can grow our money. May it be in your father's or our business that we run. Okay, that we are optimistic, may in markets or mutual funds.
Yes, sir. Thank you, sir.
Yeah.
Sir, as you know, SIP and SIP, I mean, why should we invest in SIP rather than in SIP? Because there we are getting
So,
additional
SIP
insurance
or
benefit.
SIP, again, I'm confused. SIP are basically system like systematic investment plans. Okay, SIP, again, I will not liquid. So this gives us a averaging mode, right? So like if you have heard about RDs, recurring deposits, that is one systematic investment for banking instruments, right? But the interest rates are lesser. Talk about mutual fund SIPs, we put it in any fund, it is growing. But again, the averaging helps us to lessen the risk much more. Because we are never ever when the market is taking correction. So supposedly at 55,000 Sensex, you are buying a SIP, you are doing a SIP in an index fund of Sensex. Giving an example, your units allocated in 2000 rupees will be 100 units. Just an example.
Okay.
The market corrects by next year. It falls down by some 40,000. Just an example I'm taking. Okay.
Yeah.
2000 again invested in same manner will buy you more number of units. The next year when the market again recorrects, so your entire units holding is much more. The averaging part, that is the best part why we do the SIPs.
No, but sir, actually SIP, they are actually they are also investing in the through mutual fund. I mean that scheme or that
So can you give a brief of SIP? Because I am aware of SIP, that is systematic investment plan.
That is
Okay, in the
individual
previous
insurance
class,
also.
actually, I think Panigraj sir was explaining.
Anyone?
Systematic investment insurance plan, sir, is double
Insurance
plan.
plan.
That is insurance.
So insurance plan, if we talk about, okay, systematic investment insurance plan. Insurance plan first has two things to concern. They will invest certain part into markets, major part for your giving protection solution. So when we die, there will be a percentage income that will given to our nominee. Right? This is how it follows.
Yes.
But why don't we go for a pure term plan? It is charging us a lesser amount. So for me, going for a particular term plan, if I want 1 crore sum assured, on my age, I am paying some 11,000 per year. If I die, my family is getting 1 crore. My nominee will be getting. Rest money I can divert in SIP. But if you talk about SIP, okay, the ULIPs, particularly these are invested in ULIPs, unit linked insurance policies.
Yes. Sir.
Okay. Here there are many things to take into consideration. There is a allocation charge. The ULIP fund managers, again, you don't have the flexibility to choose from what particular fund. They have a very limitations on fund. We have ULIPs. We have like Aditya Birla Sun Life Insurance is the founder of the ULIPs in entire insurance sector. But if you talk about particular funds, okay, you have very limited options. And again, your money is diversified. You have a lock-in period. These are the things you take into consideration. Our main agenda is to grow our money. We can directly put in markets. If we need protection, a term plan is a must. सस्ता में कहाँ पे बेस्ट मिल रहा है? Indian mentality we should go by.
Okay. Yeah, I mean, they are also into bond. I mean, they have actually 4 different
And
funds.
ULIPs
bond
majorly are
equity.
invested by the business person because you talk about SIP, they have tax benefits. Insurance plans has tax benefits. All the interest you will be getting back, okay, it will be via 1010D. The interest is tax free. The interest you will be earning, okay, in mutual funds, that is into long-term capital gain tax. So those are the two things. And SIPs are one part better. When a person is paying high tax, the premiums I am putting in SIPs, okay, I can get a tax rebate on that. on Insurance Act 1961 under 80C of Insurance Act. The money I'll be putting every year on ULIPs, I can get a tax rebate up to 1.5 lakhs, but never such with SIPs.
Thank you. Thank you. Clear.
Yes, I guess that was the last questions for the day to take. That is all from
any
my
more
side.
question?
We can go for one more question. It's 4-5 already. So
Okay,
I hope that's all. So thank you each and every one of you for like being so attentive, and that energized discussion was great. I hope each and every one of you learned something from my side. Okay, so that's all from my side, team. Thank you so much, everyone. So now over to Padmanabha sir.
Okay, beautiful presentation and nice question answer session. Really, I am proud of. Really, I am proud of.
I am your student, sir. Anyway, I'll be your student throughout. The learning never stops.
Because of that, I am proud of.
Sir, thanks. The pleasure is all mine, sir. All mine.
So I thank Mr. Vivek. You have accepted our invitation and came to our platform and managed two beautiful sessions on risk management. And both the sessions were beautiful and nicely were presented in a very lucid manner. In both the sessions, the question answer session was also very good. And I have tried, there's a lot. You have tried to get to give justice to both the topics that you did. On behalf of our ASBM fraternity and ASBM University, I mean our School of Accountancy, I offer my heartiest both congratulations and thanks to you, Mr. Vivek. And I hope also in our further there's a requirements, in our further there's a certificate programs, and in other occasions, we will invite you and you will come either in online or physical mode, whatever will be available for us at that particular time. And with this, they say once again, I thank Mr. Vivek. I'm really proud of because of
Thank you so much, sir. The pleasure is all mine getting associated with my entire old family. Talking about digital or physical, now we are open to travel. I'm eager to wait to get back to my old campus where I started my professional journey of learning. Again, I started my career there. So it will definitely be a great opportunity for me as well to be involved, to share my learning, whatever I have learned through you and through the entire exposure in the markets of corporates. So it's all my pleasure, sir. Thank you for providing me this opportunity.
Thank you very much. So,
and thank you to all the participants also. So I see quite energized participants here. Definitely a thank to you all for attending it.
Okay, thanks.
Thank you.
Let us, I'm coming to all our participant friends. So we are very much, let's say, thankful to you all. A program begins and ends because of the cooperative effort of both the organizer and the participants. And our participants cooperated in our entire, let's say, 20 sessions, so that all these 20 sessions, I hope it is success, these are successful, and we have tried our level best to give justice to all the 20 sessions. And once again, I thank all the participants. As per our schedule, we have completed all the 4 modules and all the 4 modules with 5 sessions in each. And Very soon, let's say, we will go with also with other certificate programs, and a few other certificates programs are in progress, and very soon it will be declared as per your requirement, as per your needs. If those certificate programs will be helpful to you, so you will also join. And in this coming week, particularly from the Monday to Saturday, our office will go with all the certification activities, and we will send the certificates to you all. And I request all our participant friends, so they should give their name and institution or the affiliation in capital letters, so that there will be no mistake while writing the certificates. So they can send in my mail ID, no problem. Okay, so once again, this I thank, and if any, if the participants are interested to speak anything, so they can also.
Thank you very much, sir.
Thank you so much, Padmanabh sir.
Wonderful
Yeah,
session.
please
Thank
go
you.
ahead.
Thank you, sir. Thank you, Vivek, sir. Thank you very much.
Everyone. Have a rocking weekend now. The weekends are for us now to enjoy. The learnings has been done. It's party time, I see. So everyone
Same to
have
you.
fun in their weekends. Do learn, do keep growing. That's where we evolve. And in evolvement,